Hello students, in previous class we have understood certain theoretical concepts and in today's class we are going to understand the term depreciation. We are going to understand this very important concept in this chapter called as depreciation. Now let us start with understanding basic meaning of depreciation. So what do you understand when you hear the term depreciation? Depreciation in simple words is nothing but a marginal reduction in the value of an asset due to constant wear and tear of the asset. Let us understand this through a simple example. Let us assume that you have bought a new car today, and today the let us assume the performance and mileage of the car is somewhere around 20 kilometer per liter of fuel. Now again, after using this particular car for the entire year, in the next year you may see a gradual drop in the performance as well as mileage of the car. Now the car which used to give you a mileage of around 20 kilometer per liter, now it has dropped from 20 kilometer to 15 kilometer. Now why this has happened? Why there is reduction in the performance? Due to constant wear and tear and because of continuous usage of the car, right? Then again in the year 3, again the mileage may drop to you around somewhere around 12 kilometer. Then in the succeeding year again it may see a drop in the mileage to around 10 kilometer per liter. And again in the fourth year and fifth year onwards you can see some visible scratches. You can also monitor certain dents on your car. Again the polish of the car has come down, the shine of your car has come down, and the condition is not so good. Now why this is all happening is because of constant use and continuous wear and tear of the asset. That means the cost or purchase prices which you have bought this car in the year 1, it cannot remain same. So it will also see a gradual permanent continuous fall in its book value, and this entire process is called as depreciation. Now anyways, when coming to income tax, in case of assessment of company, if there is any assessee who has to claim depreciation, he has to follow certain conditions which have been laid down by rule 5 of the income tax act. Now let us understand and look at all the conditions which the assessee has to fulfill in order to claim the depreciation on assets. Now the first condition as per the rule 5 of the income tax act in order to claim depreciation states that the asset in respect of which the depreciation is claimed must either belong to part A or it must either belong to part B. Now if you look at part A constitute of all the tangible assets like building, plant and machinery or furniture and fixtures. Then again, part B constitutes of intangible assets like know-how, patents, copyrights, trademarks, licenses, franchises, or any other commercial rights of similar nature. Now, if the assessee has to claim depreciation, he can claim depreciation only with respect to those assets which is either included in Part A or if it is included in Part B. If there are any assets which is held by the assessee which is neither belonging to Part A nor belonging to party, then in respect of those assets, the assessees cannot claim any depreciation. Hope you have understood this part clearly. Then again, they have given certain clarification when it comes to building, machinery, and plant. Now they are saying, according to this Rule 5 of the Income Tax Act, building not only includes your generally constructed buildings, but the term building also includes other things such as roads. It also includes bridges. It also includes culvert wells. The culvert well basically are those wells which you can see in your villages. The small wells which through which the woman will pull out the water out of it is called as culvert well. Then again, tube wells are nothing but your bore wells. So in the term or meaning or definition of building, it not only includes generally constructed buildings but also includes all these items. Then again, they have also given what do you mean by machinery. Now again, they are saying machinery is a particular asset which is directly connected with the process of processing the goods or manufacturing or production of a particular product or article. Now if you're using any asset which is directly connected with production or manufacturing of any article or processing of a particular product, then it automatically becomes your machinery. Then again, they are given the term plant includes ships, it includes vehicles, it includes books used by an assessee for his profession, it includes scientific apparatus or devices, and it also includes your surgical equipments. Now again, this hope you have understood the condition number 1 clearly. Now the second condition which has to be followed by an assessee in order to claim depreciation on asset is that the asset must be owned by the assessee either wholly or partially or partly, and it should also be used for the purpose of business or profession during the relevant previous year. That means the asset can either be owned wholly or partly by the assessee, and such asset must be put to use in the relevant previous year for conducting business or profession. Then only you can claim depreciation on such assets. Then again, condition number 3 says registered ownership is not necessary to claim depreciation, and even if the assessee is a beneficial owner or an owner under section 53A of the Transfer of Property Act, then also he can claim depreciation. Now we must understand the term beneficial owner. Now what do you mean by beneficial owner? The beneficial owner is a person who do not enjoy the title to a asset, but he enjoys the possession of the assets, and he also enjoys all the benefits of ownership even though the title of the asset is in someone else's name. Then he is called as or considered as beneficial owner. So in order to claim depreciation, the registered ownership is not necessary. Even if the assessee is a beneficial owner, then also he is eligible to claim depreciation under section 53 of the act. Then again, the last condition laid out by the rule 5 is the asset must be put to use in the business, and if it is put to use, it can be either active use or passive use. Active use means you are putting the machinery or plant and machinery or any other asset to actual manufacturing process, or you are actually using the particular asset for any other business activity. But when it comes to passive use, what do you mean by passive use or passive usage? Passive usage means keeping the asset ready to use. That means you have bought a plant, you have installed it and kept it ready for production, but you are not yet used it for production, but it is in a condition where you can put it for actual production process. That is called as passive use. So in case of both active use as well as passive use, then the asset becomes eligible for claiming depreciation. Then again, moving on, we have to understand methods of depreciation. Now, Income Tax Act recognizes only two methods of depreciation. One is straight line method and second one is WDV or return down value method. Now, straight line method is applicable only on those it is only applicable for those assets in those companies which is engaged in generation and distribution of power, and the asset must also be acquired on or after 1st of April 1997. So this is the condition for straight line method of depreciation. In case of all the other companies which is not engaged into generation of power or distribution of power, that means for all other companies except the power generation companies, return down value method is applicable on both tangible as well as intangible asset at prescribed rates. Now, how do you understand what rate is applicable for what type of asset? We have to understand through something called as block of assets. Now, block of assets means the group of assets which is falling within the same class of assets for which the same rate of depreciation is applicable is called as block of assets. So suppose there are 2 to 3 different assets which falls into same class, and in respect of all these assets, if the same rate of depreciation is charged, then it is called as block of assets. Now just wait, I will show you the image of block of assets. Now please look here carefully. They have prescribed rates for different classes or different blocks of assets. Now here, first we category we have tangible asset, that is part A, which I have explained you just now. Part A constitute of all your tangible asset. Under the tangible asset, the first one is building. Now in this first block, you can see the buildings, if it is used for residential purposes, except hotels and boarding houses, then again the rate of depreciation charge will be 5%. Then again, if there are certain buildings which is used for office, factory, godowns, hotels and boarding houses, then the rate of depreciation is slightly higher, that is 10%. Then again, if there is any building asset or purely temporary erection such as wooden structures, then the rate of depreciation applicable on the same is 100%. Then again, second category under part A of tangible asset, we have furniture and fittings. Now under furniture and fittings includes electrical fittings, and electrical fittings includes your electrical wiring, switches, sockets and any other fittings such as fans, air conditioners, etc. Now if you look at this block for furniture and fittings, then again the rate of depreciation charged on the same is 10%. Then again third category under tangible asset, that is part A, is called as plant and machinery. Now in case of general plant and machinery, then the rate of depreciation charge is 15%. In case of all the vehicles like boats, steamers, ships or any other vessels which will travel on water surfaces, then the rate of depreciation charge is 20%. Then in case of all the commercial vehicles or public transport system like buses, motor lorries or taxis, the rate of depreciation is 30%. Then in case of aeroplanes and aero engines and other life-saving devices and apparatus, the rate of depreciation charge is 40%. Then if there are any containers which are made out of glass or plastic, and which can be used as refills or reusable devices, then the rate of depreciation charged on such assets is 50%. Then again, if the assessee is owning any computer, including the software and books which he uses for publications apart from his own publication, then again the rate of depreciation charged on same is 40%. Then again, if you are having any energy saving devices, then again rollers which is used in flour mills and sugar works and steel industry, then the rate of depreciation is 40%. Then again, if you are having any air pollution control devices, whether it is air water pollution control devices or solid waste control devices or any other business or any other books which is used by the assessee for lending it in the library or library business, then the rate of depreciation charged on the same will be 40%. Then again, you have part B, which is intangible asset. So in case of intangible asset, there is only one rate of depreciation. It can be any intangible asset, but the rate of depreciation is only one, that is 25% will be charged on the all your intangible assets. So this is your block of assets. Hope you have understood block of assets clearly. Then again, moving on, we have something called as additional depreciation. Now whatever rights just now I have shown is called as your normal depreciation. So apart from this normal depreciation, there is something called as additional depreciation laid out under section 2 subsection 1 clause 11A. Now, if you have to claim additional depreciation, there are certain rules with regard to additional depreciation. Now, additional depreciation is applicable to assessees, only those assessees who is engaged in the business or manufacture of production of any article or any other commodity. That means if you have to claim additional depreciation, that means you should be having some industrial undertaking which is into manufacturing or production of any article or commodity. Then again, second condition for claiming additional depreciation is that it is applicable only on new plant and machinery acquired and installed after 31/3/2005. So it is only applicable on plant and machinery which is acquired only after 31st of March 2005 onwards. Then again, it is not applicable for following items. It is not applicable for ships and aircraft. Again, it is not applicable on second hand plant and machinery, or it is not applicable on plant and machinery in case if they are using it for office or residential purposes. Then again, any other office appliances or road transport vehicles, again this additional depreciation is not applicable. See, it is very simple. It is applicable only on those assets or plant and machinery which is only used for production or manufacturing certain goods or commodities. Simple. Then again, look at this 4 point, which is very important when it comes to additional depreciation. Additional depreciation will be allowed at the rate of 20% of the actual cost of machinery. Now, in case of additional depreciation, there is only one rate that is applicable, that it is 20% on actual cost of actual purchase price of plant and machinery. Then additional depreciation can be claimed only once for an asset by the assessee. Now it can be claimed only once, and it cannot be claimed like normal depreciation every year throughout the useful life of the asset, but it can be claimed only once during the entire lifetime of the asset. That is with regard to additional depreciation. Then next very important concept in this depreciation is there is something called as terminal depreciation and there is something called as balancing charge. Now, terminal depreciation is nothing but the terminal value of an asset when the asset is sold or discarded. So anyways, to explain the concept of terminal depreciation balancing charge, I will explain it through a simple example. Now let us assume there are certain industries which is following WDV method of depreciation, and there are certain industries like power generating units which will be using straight line method of depreciation on its assets. Now for all those industries which are using WDV method, let us understand. Now for time being, you forget straight line method, only focus on return down value method. So if there are any companies which are following return down value method of depreciation, we will understand what will be the treatment of depreciation. Now let us assume the returned on value or the book value at the beginning of the year is coming to 10,000 rupees. Now if the same asset which is whose book value or returned on value is 10,000 is sold for a sale price of 20,000, then the company is making a profit of 10,000, and this 10,000 profit on sale of such plant and machinery or asset is considered as capital gain if the company or an assessee is following WDV method of depreciation. Then again, look at this second example where the returned on value or book value at the beginning of the year of a particular asset is 10,000. Now let us assume the asset whose book value is 10,000 is now sold for 5,000. That means the company is incurring a loss of 5,000, and this 5,000 loss is considered as capital loss. Now if you are following return down value method of depreciation, and if you are earning any profit on sale of any asset, then such profit is considered as capital gain. Then again, if you are following return down method of depreciation, by selling certain asset or by discarding certain asset, if you are incurring certain loss, then such losses will be treated as capital loss. So this is with regard to return down method value of depreciation. Now, in case of power generating units, we have understood on certain class of asset you have to follow or apply the SLM method or straight line method of depreciation. Now let us assume the book value at the beginning of the year of a particular asset is 10,000 and we have sold it for 20,000. That means here in this case also we are making a profit of 10,000. Now this 10,000 will not be considered as capital gain. So if you are following straight line method and if you are getting or incurring any profit on sale of any plant and machinery or any other asset, then whatever profit you incur on the same will be considered as balancing charge. Then again, in case of following straight line method of depreciation, if your book value at the beginning of the year is 10,000, you are making it, we are selling the same thing for 5,000. That means you are incurring loss of 5,000 in this case. That means whatever 5,000 loss you are incurred, you cannot consider it as capital loss, but it should be treated as terminal depreciation. Now, I hope you have understood what is capital gain, what is capital loss, and when do you have balancing charge and when do you have terminal depreciation. Now, hope I have made these concepts clear to you. So this is with regard to terminal depreciation as well as balancing charge. Now, these are certain important concepts which we have to follow under depreciation. Now, when it comes to terminal depreciation, again, there are certain rules. We will quickly have a look at it. Now, terminal depreciation is applicable for only those undertaking where they are engaged into generation of power or distribution of power. Then again, if you have to claim terminal depreciation, the rate of depreciation should be, or the method of depreciation followed, which is followed by the SSC should be again straight line method or SLM method. Then again, the asset should be sold, demolished or destroyed in a previous year, and it should be completely written off from the books. Only if the asset which is sold, discarded, demolished or destroyed in a previous year, only then losses can be considered as terminal depreciation, provided that the entire value of the asset should be written off completely from your books of accounts. So these are certain conditions for claiming terminal depreciation. So these are certain concepts with regard to depreciation. Please look at this video, please understand this video lecture whatever I have explained you today, because again we have separate problems with regard to depreciation. Thank you so much.